What is going on, traders? Welcome back to the Traveling Trader. In this video, we will be discussing NIO earnings, how to trade NIO stock before earnings on November 17th. I will be giving you some extremely interesting options trades that could be extremely lucrative depending on which way the market breaks. One of the option strategies I'm going to use is actually the same one that I used on AMD, which you guys have asked for. Netted us over 530% profit on AMD overnight. I will be using a similar strategy for NIO, so you will want to stick around to the end for that. So I'll be giving you a few option trade ideas, a few stock trades. I've done a few of these earnings videos before on stocks like Tesla and Apple. You guys really seem to be enjoying them. Plus, you get a lot of value out of them, which is the most important thing. And if you guys get value out of them, then I will keep making the videos, no doubt. So leave it a big fat thumbs up just like this. And all I ask is that you subscribe to the channel if you're not already subscribed. And if you're new here, I just want to say welcome to the best trading channel on YouTube. We don't just provide you generalities and fluff. We actually go into options trades, stock trades, swing trades, how to day trade, how to build solid long-term portfolios, fundamental analysis, technical analysis, how to chart. I provide you the full spectrum. All I ask is that you subscribe to the channel if you're not already subscribed, and leave it in the comment section below. Let me know how you're trading NIO before earnings, or if you have any questions about any of these strategies. And if you want access to all of my trades, all of my portfolios, you want to talk to the group of almost 1,000 traders that we have, link is in the description. It is by far and away the best trading group on the planet. I guarantee you that. All trades, no fluff. Without further ado, let's get right into it. All right, so firstly, I'm going to be going over NIO's previous earnings announcements and how the delivery numbers affected those earnings announcements. As you know, just like Tesla, NIO reports its deliveries well before earnings so that there are no surprises. Then we'll be getting into the 3 option strategies, including the monster strategy that netted us 530% on AMD. I will be using a very similar strategy here. And lastly, I'll be going over how to trade NIO stock before earnings for those of you that don't want to engage in options trades, and everything will be documented as chapters in the video, so you can skip forward and back as you like. All right, part 1, NIO's previous earnings. So how did NIO react to previous delivery numbers, and how did NIO actually do in the last few earnings? Well, here you could see all of NIO's earnings going back to November 2018, and you can see that the last 3 earnings NIO dipped a little bit. The last earnings, it dipped 8%, the time before that another 8%, the time before that 16%, and the last time that NIO actually grew on earnings was December 30th, 2019. Now, why was that? Well, back then, NIO actually hit a record number of sales in 2019, but this still came as a surprise because NIO actually was having trouble finding funding, and it wasn't until earlier in 2020 that they secured that over $1 billion in funding from the Chinese government and other partners. So for those of you new traders who think that you could just buy a stock before earnings and it will rally, it's not quite that simple. It really depends on what happened leading up to the earnings. A lot of times you see stocks pump before earnings, and so when the earnings announcement actually happens, if nothing significantly new is reported, then it will either stagnate or might even drop a bit as people take profit. And if we take a look at NIO's chart, that's certainly what happened. I mean, between last earnings and this earnings, NIO actually increased in price so far almost 218%, right? So we're seeing a massive rally leading up to this earnings. Also, like I said, NIO already reported its delivery numbers for upcoming earnings. So in October 2020, it says NIO delivered 5,055 vehicles in October 2020, increasing by 100% year over year. That information is already known. And if we take a look at the previous earnings in August, you'll see that NIO obviously also reported their deliveries before then, and it had a 322% increase year over year at that time. And yet it still dropped last August during earnings. Now, why is that? Well, it's because it also had another monster rally from the previous earnings leading up to those August earnings. If you take a look at it from this earnings season here back in May to the earnings in August, NIO grew by almost 380%. If we already had a massive rally leading into earnings, delivery numbers were already reported, so that's known information. It is most likely that we don't see a massive rally on that actual earnings day. It is more likely that you see some stagnation, maybe a little bit of retracement. Something significant an unknown has to be reported in order for you to see a massive rally on earnings for a stock that has already significantly gone up prior. Now, I want you to pay attention to one thing, and this might be valuable to anyone, even for you guys who are experienced traders and investors out there. There is such a thing called an expected move that options traders calculate using an at-the-money straddle. Even if you're not trading options, you will want to know what the expected move on earnings is, meaning what is the plus or minus range for that stock on earnings. What range is it expected to move within? As you see here, you actually have an expected move that's represented by these blue bars, and then you actually have the column itself, or the bar on the graph, that shows you what NIO actually did on earnings day. So how do you calculate this expected move? And I just want to highlight that NIO actually moves very well within its expected move. So if you see here, the last 8 earnings or so, except for one time in December when it shot past well above its range, it actually stays quite within range. That means that we can actually set up some of our trades using this expected range. And we'll get into that when we talk about our trade specifics in the next chapter. All right, part 2 of this video. Now that we know how NIO has responded in the last 8 earnings sessions, the fact that it is very likely to stay within its expected move, let us go over the options trades and set up some options trades based on that knowledge. And like I said, in part 3, I will be discussing how to trade the stock itself. So feel free to find it in the chapters below and skip to that part if you're not an options trader or absolutely not interested in options. However, even if you're just mildly curious, I would recommend that you stick around. In my view, options are the best way to maximize short-term movements. And there's no better time to start learning than today. So let us get into our options trades, like I said, and then I'll go over the stock trades. All right, so options trading strategy number 1. You heard me talk about this time and time again. We're going to be doing an iron condor. What is an iron condor? An iron condor is basically establishing a range and hoping that NIO falls within that range. And if it falls within that range, then you get to keep 100% of the money that you sold the iron condor for. Now, how do we know what strike prices we use to set up our range? Well, just in the last segment, I was talking about the expected move. So if we set up a range based on the expected move of NIO, and NIO has a great track record of respecting this range, then it could be a lucrative opportunity. So how do we find that range? Well, if you're using Thinkorswim, it actually calculates this for every single date in the options chain. So if we go out to November 20th, because NIO's earnings are November 17th, then you'll see here there's a plus or minus 8.58. So based on its algorithm, what it's saying is that NIO's expected move for this week's expiry, which is November 20th, is plus or minus $8.58. So how do we use this to set up our iron condor? Well, NIO currently is trading at around $41.63. You essentially go out $8 one way and $8 the other way, and you create your range. Let's do that right now. So we can go out to the $50 strikes for the call side. We do a sell, iron condor, and you could do this in any platform. It does not have to be Thinkorswim. You can even do this in Robinhood. You just have to follow the strikes. But essentially, we're going to be using the $50 strike on the call side. We're going to make it a $5 wide call spread, and then same thing on the put side. On the put side, we'll go down to maybe the $34 range. Let's see how much money we'll get for that, because we're looking for a range below the current price of NIO and above the current price of NIO. So for the put side, we'll do, let's say 34, and we'll also make it a $5 wide strike on the put side, and that's giving us $122 per options contract. If we analyze this trade, you'll see here exactly what it looks like. It looks like that range that I was talking about, right? If NIO falls anywhere between $34 and $50, you get to keep $122 per contract that you open. Now, when am I going to deploy this strategy? I'm actually going to wait a few days this week to see how the market moves with the news of the election that we got over the weekend. And because a winner was more or less declared, we could see fireworks in the market this week. So I want to see if we do get major moves, especially in the EV sector, because the Biden administration is seen as more favorable for clean energy related stocks. We could see the EV sector have a boom. So I wouldn't want to open the range of my condor so early. I want to wait for a couple of days and see if we get some hyperbolic trades, and then set up my iron condor range based off of that new price movement. So I'm not going to do this just yet. I'm going to wait a couple of days, but this is one of the strategies that I'm going to deploy. All right, option strategy number 2. This is actually the same strategy that we used on AMD when I had that 533% gain overnight on that trade. Obviously, this is not to say that you will make 530% every time you deploy the strategy. You can even lose money. Options trading is risky. However, if we are even mildly bullish on NIO, then this is the option strategy, or this is one of the option strategies that we want to look at. So while an Iron Condor is seen as a neutral strategy because we have a range and NIO has to fall within that range, this is if we're slightly bullish on NIO. And this is a strategy that I will likely be deploying first thing Monday morning and actually closing before earnings if we do get a rally. I'm not going to hold this strategy on earnings or after, but keep an eye out in the trade alerts in our community below to see when I'm going to be opening or closing this. Now, this strategy is what I call a super call spread, right? There is actually no real name for this strategy. It's not an official strategy, but that's the cool thing with options is that the more you know, you get to mix and match option orders and create a custom order that fits your risk profile and your outlook. So what I do with this option strategy is I go a little bit out of the money on the call side and I buy a vertical call spread. What is buying a vertical call spread for you newbies? Buying a vertical call spread just means that you are bullish on the market and you need the stock to expire above your strike prices. In this case, I'm opening the 43.44 vertical call spread on NIO, and it looks like this, right? So it's the classic S shape that we see on vertical call spreads. And if NIO expires above $44, then we get to make actually double our money because we're getting 33 cents for this call spread and it's worth $1. Remember, a spread is worth the difference between the strikes, in this case, $1. So in this case, we are paying 33 cents for the spread. It is worth $1 if NIO expires over $44. So we get to essentially double our money and make $67 if NIO expires over 44. However, remember, I said this is a super call spread, or whatever the hell I called it, super bull call spread. So in this case, especially if our bias is slightly more bullish on NIO, we can also sell a put spread at the same time. And you essentially want to pick strikes that you think NIO is going to stay above. So let's say that NIO doesn't hit that $44 and doesn't go above it. Well, what is our floor for NIO? What do we think it will find support at and not go below? That is essentially where we want to sell this put spread. And remember, buying a call spread is bullish. Obviously, selling a put spread is also bullish. And we're collecting premium for executing that trade as opposed to paying for it like we're doing with the call spread, right? So let's just pick the 38.36 strike prices here, which is a 0.3 delta. So there's a 70% chance that we actually win out on this trade. Sell vertical. I'm going to change this to 36 and we can sell the 38.36 put spread for $71. And if we add this to our trade, you'll see now that we have a super call spread, right? So if NIO finishes above $44, now we get to keep $138 as opposed to $67 with just the regular call spread. And if NIO finishes in this range between $38 and $43, then we get to keep $38. And if NIO goes below $38, then we lose $162. So it's kind of like this throttled call spread, right? Where we have this range in the middle where if NIO stays between, we still collect some profit. It is slightly bullish where if NIO is above $44, we get to maximize our gains and we can't have NIO falling below $38. Obviously, we'll want to modulate this according to the levels that you think NIO is going to stay above. Now, why is this such a large gainer and how did we make 533% on AMD using this exact same strategy? We're collecting $71 for selling the put spread. We're buying the call spread for $33. So let's just go to our trusty calculator here. And we are collecting $71. We spent $33, right? So we're actually getting a net credit of $38 per contract. Now, if AMD, well, not AMD, sorry, if NIO finishes above $44, will we make another $138? And 138 is essentially what, 263% gain from 38. So this is why this strategy can be extremely lucrative because the cost of entry is very cheap. And if you have a slightly bullish outlook on NEO, see, NEO doesn't have to go to $60 or $70, right? Like a lot of beginner options traders are very used to just buying calls, like single calls, and hoping that the stock goes to the moon. And if it doesn't, then, you know, you just wasted money on a call. When you're buying single calls, you have to be significantly right to make money. But the more you know about options, the more that you can actually construct these complex option strategies and maximize your gains without the stock having to make crazy moves. All right, option strategy number 3 is the most risky. And if you're not experienced trading options, then I don't suggest you do this, or do this paper trading so that you can get a feel for how this looks and how this type of strategy will behave depending on NEO's price action. And then we will get into the regular stock trade. So here's option strategy number 3. This is going to be based off of what NEO typically does within the expected range. Like I said, NEO usually stays within the expected range, so it actually doesn't move a lot. Now, one other data point that I was looking at with NEO, if we take a look at its previous earnings, right, but from the standpoint of implied volatility and what happens with the at the money straddle, you will see that implied volatility, which is here, is this red line, usually drops right after earnings. Now, this is very typical of any stock, right? Because implied volatility is highest during binary events like earnings, and then we tend to see this drop. But if NEO is respecting the actual price moves, the actual price range, right, and we tend to see the implied volatility drop, well, then you want to take advantage of what's called a straddle, or an at-the-money straddle. And if you see here on Thinkorswim, it actually calculates the at-the-money straddles the last few earnings. And you can see that in general, the at-the-money straddle price goes down right after earnings. It's almost the same exact graph, earnings after earnings after earnings after earnings. So if we sold an at-the-money straddle, and, you know, we're expecting NEO to behave like it has, or like it does usually, then essentially we could sell the at-the-money straddle for a high price, and then once it drops after earnings, we can buy it back for a cheaper price, netting us a profit. So if we take a look at the at-the-money straddle for NEO, it would be at the 41.5, according to current prices, it would be at the 41.5 strike. And if we sold the straddle, we can get $775 for each straddle. And let's analyze this. And you could see what this, sorry, not this page, but let's analyze this. And you could see that basically NEO has to stay within a range for you to keep some of the money, or preferably all of the money that you sold it for. Now, you would keep max amount if NEO stays exactly at that, at its spot price currently, right? At around 41.5. But we all know it is likely to deviate from there. We just don't want NEO to deviate so much. And depending on which, you know, it can go in either direction as long as it doesn't deviate a lot. And so we're collecting $775 for this straddle. And we're hoping that, you know, after earnings, the price of the straddle will drop drastically and we can close it out for much cheaper. Another thing to pay attention to is you're collecting time decay on this. This is why I'm such a fan of being a net seller of options and not a net buyer, because time decay is not working against you, it's working for you. So in this case, we're collecting $30 of time decay every single day that passes, as long as the price and volatility remain stagnant. And if volatility drops, we collect another $6 per every point of volatility drop. Now, we don't want the price to move drastically in this case. So usually with straddles, what I end up doing is I sell them into high volatility, and then once volatility starts dropping, as long as the price doesn't move so much, you can buy it back for a lot cheaper. Again, this is a very risky option strategy for those of you that don't have experience trading options, so I don't recommend or suggest that anybody who hasn't even executed basic options do this at all. You could very well just get your feet wet with selling a regular put spread, for instance. Like if you were bullish on NEO and you thought $38, you know, was the floor, you could sell the 38.36 put spread for, you know, $71, and you get to keep $71 if NEO expires above $38 on expiration. You can also buy a call spread if you're slightly bullish. If you think NEO is going to go above that $44, for instance, you could just come in here and buy a regular call spread for $33. And if NEO does expire above $44, then you get to make double your money. You'll make 67 cents. or $67 per contract. So if you're a beginner, I would suggest looking into basic vertical spreads like selling a put vertical spread or buying a call vertical spread as a way of maintaining a slightly bullish position. All right, so part 3, how do you trade NIO stock, right? Well, like I said, we experienced this massive rally leading into earnings, and we have about another week of full trading before earnings. So if you're already in NIO, I would just continue to hold at least for this week and see what happens with the price action. Like I said, with the election just about over, if Biden is the actual winner, then a Biden administration can be favorable to EV stocks, and you'll want to see if we do get another uptick or kick this week because of that. But I'm not expecting NIO to jump on earnings because we have a lot of history telling us exactly what NIO does on earnings. It actually does typically fall because it has such a violent rally leading into earnings. Unless something completely out of the ordinary is announced, I'm expecting stagnant action or even a price drop as we see here typically after earnings. So I would not buy anticipating that we're going to see an explosion on earnings. That's not how it works. Usually traders tend to take profit around these binary events. Like if you bought, after the dip from the last earnings and you held till now, well, you will be more than happy to sell to those who are going to be buying at inflated prices. So if I wasn't in NIO already, you could try and take a stab on Monday pre-market to see if we get a rally during the week. But leading up to earnings, as we near earnings week, maybe a day or two before, I would not actually buy NIO if you haven't already bought 1 or 2 days before earnings. I would actually wait until earnings plays out and then buy. I would even engage in something called a leap call, which I talked about before. And if you did it from the time that I talked about it in the last video, you'd be up, I think, around $1,500 per option right now. But you want to do that when the price of NIO drops. And as I always say, you want to pay attention to the 21 EMA, which NIO, as well as other stocks that are in a momentous rally, they tend to respect this 21 EMA, this white line. Every time that we retrace, we hit that 21 EMA before seeing another rally. So if you do see NIO drop to around the 21 EMA, in my view, you'll want to take advantage of those dip buying situations. But if you're a long-term holder, as always, dollar cost averaging is probably your best bet if you're a buy and hold type of investor, meaning buying a certain amount on a scheduled basis or buying some every single time that the stock dips. There are different ways to dollar cost average, but that remains probably your best solution for a stock that you really want to hold into retirement. Anyway, that is it for this video. If you got anything out of this video, please leave it a big fat thumbs up like this. If you're not subscribed, subscribe to the channel. If you want access to our trading group where I go over all of these trades, you can ask me questions at any point, at any time you like. You can ask the other traders questions and you will likely get an answer. Link is in the description. It's the best trading community in the world in my view because we go over complex things as well as simple things. We teach strategy. We talk about stock picks, entries, exits, etc. Link is in the description below. Sign up. It's a great value. Leave it in the comment section below. Let me know how you're trading NIO going into earnings. Are you already in NIO? And if you have a question about any of these strategies, also leave it in the comment section below. If you want to learn how to do technical analysis or trade options, I do one-on-one training. Those spots go very fast every month. So check with me next month on the 1st of the month usually. Hit me up on the Discord or email me on my site and, ask me if I have any spots open if you're interested. As always, traders, stay safe out there. Peace.